Hello, good evening. It is currently 6:22 p.m. New York time or Eastern time. And we are looking at a trade review that I did today. So hopefully you can hear me well. This might be a little better. So as you can see here, this was on the contract for ESM 2025. It was another ENS intraday trade review, and something I want to be a little bit more, I guess, proactive about is naming my trades. So based on the highlights. So basically on the highlight of what I was thinking during the trade. So here I have utilizing the first presentation fair value gap and mitigating unrealized risk, which kind of made sense to me. I thought about doing mitigating potential risk, but unrealized is the term that I went with. So without further ado, here are all the executions. You can see that this is here on purpose. I threw in a limit order at 59.63 and then canceled it pretty soon. So that was at 12:52, and then about 8 seconds later I throw in a market order. And while this is the what's the best way to put this? This did determine the outcome of the trade, and I'll explain why. But then you can see I had a stop filled at 59.6450, which was a break even essentially, or a tick of profit. But I did have a 5-handle stop and then a 5-handle limit placed on that. So you can see that 5-handle limit was canceled and the stop was triggered at 59.6450, but it was placed 5 handles below 59.64 and a quarter. So I'll show all of that in a second. Here's the weekly chart. Currently, right now, we are trading inside the wick of this candle, and ignore this dotted dashed line. I'll show you what that is in a second. I just decided to keep it there. So anyways, currently we are trading inside this wick over here, but if I'm being quite honest, I don't have a clear 110% read on the weekly chart. So it could basically go both ways. So weekly chart, just looking at it, it's good to draw this level and this level, so the weekly highs and lows, and then I would take that, extend that out, and it does kind of line up exactly with that dashed line, but it may not be exact. And here's the daily chart. So the 1 minute daily buy side, 1 minute and anchored to the daily chart's buy side liquidity or previous day high. But on the 1 minute chart, it's anchored to the 1:12 p.m. May 19th, 2025 high or candles high. Basically, I was looking at the PM session yesterday, and around 1:30 or after 1:30, I looked at the 30-minute candles, or the past 30 minutes, and drew the buy side on the high and low of that 30-minute interval, and it happened to be the daily high, and it was utilized throughout the trading of Tuesday. So we have all of this over here, basically an order block, but I'm not really looking at all of this right now. So in the dialogue of my head, I'm really only going to focus on what I was looking at the trade and try not to lean outside of that, basically. So, and I'm going to basically keep my focus on what I was looking at during the trade and stick to that. So I think I'm gonna, try to incorporate weekly and daily charts. But most of the time, although I'll have those in my mind, I'll mostly be focusing on a 1 minute or 5 minute or 15-minute chart. Anyways, we do have this daily fair value gap, buy side imbalance, sell side inefficiency, coupled with a volume imbalance from last week. This is Tuesday's candle right here. And you can see on Monday, we go down into that, and then we continue to trade higher, forming an up close candle. And then Tuesday's trading, which is today, we go up in there and come back down, creating that sort of range. This was the down portion of the delivery was delivered mostly during the PM session. So here we are, daily candle, up close. Not much to look at if I'm being honest, but there is a little volume imbalance right here. Anyways, here's the 4-hour chart. Once again, nothing that I'm looking at during the trade. I'll kind of focus on what is relevant to the trade. So yeah, we do have the new week opening gap, which the market did trade into during the PM session. Same thing here, new day opening gap above the market. So this is kind of how the daily candle forms from the close of 5 p.m. and the open of 6 p.m. We go up, trade into that buy side, which is a 1 minute buy side that I marked on the 1 minute, but it's also anchored to a higher time frame, which is the daily chart. So you can see that's a stop raid above the marketplace. But going down to a 1-hour chart, here it is. So same thing, new week opening gap. You can see how we did eventually, after all that consolidation, trade down lower into the new week opening gap. So that was the market's that day's objective, essentially what it was trying to reach for throughout that whole entire consolidation period, which was opposed to my trade, and I'll get into that in a second. Still ignoring this dashed or dotted line. You can now see on the 15-minute chart we have this white line here, which is the first presentation of the weekly gap. So you can see how the market trades kind of beautifully off of that. And typically, not all the time, but because this is a larger gap, about 18 handles, the gap will form inside of here is what I've noticed. Sometimes the gap is smaller, and then because of that, the gap forms outside of it. But you can see how the gap is contained inside the low and the high, which you can sort of use that as a barometer on a 1 minute chart to see how the candles react. And it's nice how it's, if you were to draw the high to the low here, it's in a discount relative to that high and low of the new week opening gap. So it would just be like throwing gradients on this. But you can see the new week opening gap, price comes down, touches the low, so completely closing that, even though all these candles have traded through it. One more time, comes back down, touches the low, and sort of retraces back up or pulls back up. That's a 15-minute chart. You can see how from the true day open, so Tuesday's true day open, it sort of just stays range bound relative to this 1 minute sell side 12:41 p.m. So when I was looking at yesterday's session, or yesterday's PM session around 1:30, and looking for a buy side and sell side, this is what stuck out to me. And you can see that later we did eventually come back down into that sell side, but look how it's used on Tuesday's trading. So really nothing interesting, but going down onto a 15-minute chart, but a little more refined. You can see between this and this, I just kind of zoomed in a little. Nothing that interesting. Here is the 5-minute chart with all the sessions. So we have London, we have New York, lunch hour, and then the PM session, and you can see that majority of the movement of the daily range occurred over here in the PM session. Otherwise, it's still just, let's just say that this dashed line for now, which it's not, is that weekly candles wicks consequent encroachment. You can see how we just kind of trade up and down around that level throughout the London session, throughout the New York Open, throughout the New York AM session. Market looks like it wants to continue to trade lower during the opening range gap, but comes back up into that level right there. And so next, same view, just without the sessions now. And you can see how a lot of levels are sort of transposing to be on around the same area. It's like that 1 minute sell side is pretty close to that dotted line. But anyways, we have the 12 a.m. open here. Extend that out. Still going back and forth around that level. So when I took this trade, it was about it was at around 12:50 going into the 1 hour or 1 p.m. hour. So all of this chop or mess was sort of behind me. So I had wanted to see a spring up into this buy side, best case scenario. But you can see once I go down to a 1 minute chart, that did not happen. And here are the executions here. So I'll show you the exact entry and exact stop placement, limit placement, and then where I exited and why I exited. But you can see this is a 1 minute chart zoomed out, 1 minute chart zoomed out completely, and it's just very back and forth. So you'll see a lot of people complaining about this. That's typically what I add into my logs. Well, it's not impossible. It's just a little better to wait. So that's exactly what I did. I waited for the 1250 to 110 macro, and I wanted to see it trade above this first presentation gap from 930. I also really liked how this dealing range, newly formed high above these highs, and a newly formed low below these lows. I liked that the dealing range equilibrium was in alignment with the first presentation fair value gap formed as a SIBI, but I wanted to act as inversion or bullish inversion gap, and preferably send me up into these highs right here. Now, so this dotted line relative to the entry, or I'm going to talk about this dotted line. Basically what it is 5 handles from my entry. Up above is where that line was. So I placed an alert in expectations that the market would trade there, and then just alert me on my phone. I was managing on and off. It was on mobile. So yeah, here's a closer look. You can see there's really not much that I can speak off of here without taking a good look at this personally. Like, it's just back and forth. While there is, it's definitely not random. It's not as enticing, I guess, is the best way I can put it into words. So you can see the candle right here trades down into the halfway or midpoint of that first presentation gap from 930, and then trades higher. And so the idea or premise that I was trying to attempt was filling at the high of that gap, which you'll see in the executions. So it was 59.63 that I tried to place my limit order at, and then I saw the reaction. It continues to trade up. Instead, I get filled at the high of that candle right there. And while it did affect the outcome of the trade, it wasn't something that sort of put me on edge. But I was aware of it, and so I just noticed how, like, that was kind of the highlight of the trade for me. Something I wanted to highlight in my journal, or this log, is that had I just waited one singular minute, you can see the next candle does trade back down into there, or the high, failing to touch the consequent encroachment. I could have gotten filled at 59.63 and then placed a limit at 59.68, which the market goes up there and trades up into the 59.69 level. So I would have been plus one handle of sort of leeway or space. Instead, I get filled at 59.64 and a quarter, I think it was. I'll show you in 1 second, right here. Zoom in closer. Over here. So I wanted to get filled at the high. Instead, I get filled at the high of that candle using a market order. And here's removing that dealing range just to sort of clear up the space a little bit. I get filled at 59.64 and a quarter. 5 handles below is a stop. 5 handles above is a limit, which lines up with that right there, that dotted line. And so you can see that the market, even though it doesn't really look like it, there's only a tick of gap in there. So had it went up one more tick, it would have just sort of could have possibly filled it. We don't know for certain unless it went one tick above, is what I'd like to think. But essentially, had I just lowered or been like a little more patient, a little more demanding, and wanted to fill at the high over here, I could have gotten that fill at 59.68. But it didn't do so. So as the trade is running up, form this gap over here, market trades down into it, okay, fails to touch this first presentation gap one more time. So not only does it fail to touch it, but it obviously, if it's failing to touch it, it doesn't go below it. So now what I'm thinking is referring to my back testing and thinking to myself that, okay, the only thing that would change the trade here for me at this current time that we're trading into this gap right here is if we close below this low right here, this gap. This gap's low. And so market continues to trade up, relative equal highs. We stab up into it one more time, falling short one tick of the limit order. And then right about somewhere in here, I think it was a little bit, it could have been a little bit before this, I moved my stop up to break even and plus one tick. So you can see that next candle comes down violently and trades to the stop at break even or better, and then eventually comes back up, failing to ever trade to that buy side again, and then melts lower during the PM session, going into the 2 p.m. hour. So I'm glad that I was I'm glad that I got the experience, and B, I'm glad that it was harm-free. So I got out at break even or better, and it was a nice trade. It's just that had my limit, had I been a little more patient, nothing about the market, more so from my end, my psychology, had I been a little more patient and demanding in my trade, that limit would have filled me, and I would have seen that ends model pan out But because I market entered in, the market sort of fills me much higher than I intended. And even though it was only like a tick or two, but it made a impactful difference on the trade. It changed the outcome of the trade, but I was able to adapt and sort of. One thing I was thinking when I was moving that stop up is, it's getting pretty close to the entry or the limit order at 59.69 and a quarter, so it won't harm me to move that up because I'll be at break even or better. And B, totally forgot where I was. Oh yeah, B, if I move my stop up a little higher to break even, I could feel a little more comfortable holding through the bad weather or whatever. But yeah, maybe you can hear the rain in the back. I don't know if you can. It's pretty bad. So power might go out. So I'm going to cut this recording here. And yeah, I mean, not a bad outcome, not a great outcome. Just indifferent is the best way to put it. So one thing I do want to check here. Something I've been tracking is the heart rate when I enter trades. So let me just go here. If we look at these orders, 12:52, we'll say 12:53 is right about when I got filled, and I just want to see my heart rate at 12:53. So this is New York time, and my phone is on CST. So give me 1 second. I'm just gonna do this on the recording for myself. Alright, for some reason it's not showing any data. That's strange. Yeah, oh, it's because it's not synced. Alright, give me 1 second. So, if you have any sort of smartwatch, you can look at your heart rate. So, I'm looking at my chart for today, and I wish you could see this. I'll figure out. But 12:53 I took the trade, so that's about 11:53, 11:50, I'll say. And looking at my heart rate, at 11:50 it tracks 89 beats per minute. 11:55, and this is going in 5-minute intervals, it tracks 90. 12 p.m. it tracks 85, and 12:05 jumps up to 91 beats per minute. 12:10 p.m. sort of slows down, 84 beats per minute, and then 12:15, 94 beats per minute. And so where was I filled? I was filled at 13:06, so that's 12:05. Yeah, so honestly not that much of a change, or at least what I was expecting, which is good. I have a feeling I'm doing something wrong from my end just looking at this, but yeah, that's pretty cool. I'll have to see an exact process for that. I don't know if I can go into 1-minute data on this chart, and I definitely don't want to I don't want to be looking directly at my heart rate while I'm in a trade, but it's a cool little test or whatever, just additional data. So yeah, here's a trade, 59.64 and a quarter, 1 tick short of the limit, trades down to break even. That's basically the highlight, using the first presented fair value gap at 9:30 as a barometer So you can see that multiple times we go up above it, we come back down, we go up above it, we come back down. And so I tried to catch a trade right here and get filled at 5 handles above the market from my entry, but we fall 1 tick short, and then it comes back down to the break-even stop. So yeah, thank you for watching, and yeah, do like and subscribe. I hate saying that, but it's cool for me